Deanna, when you spoke at Huntswood's Non-Exec Director Forum last year, one of the things you said was that if boards aren't talking about digital, just what are they talking about? And the regulator seems to agree with you. In their business plan for last year, technology should be one of the top 4 items. And yet only 16% of organisations, businesses, are talking about cloud-based technology, and less than half are in customer-facing mobile propositions. So are they actually doing anything about this, or is it just talk? What's going on?
Well, you know, it's really interesting in the digital area, because what's happening in digital is exponential growth. And that means that over a relatively short period of time, big advances happen. So it was probably about within the last 5 years that all of a sudden you would be reading about the amount of digital content that we have is doubling and doubling and doubling again. And really, Moore's Law that came into effect several years ago is still underway. So we're in an exponential technology change. What does that mean for banks? It means that people are in varying levels of being able to embrace new technologies. Some banks have huge legacy systems that they're trying to deal with. Others have dabbled about a bit they might have a mobile app. Others are really embracing this from the top and making significant change. So we're in that period of time where the overall stats don't necessarily reflect all the effort now that is coming on more and more every day.
So do you see that is it a year, 6 months, 2 years, that you'll suddenly see banks, other financial service companies suddenly making a big explosion about what they're doing? Or don't you see it like that?
I see that you have a lot of people now that are doing a number of different things on a lot of different fronts. So this is also exasperated by the fact that you have a number of disruptors that are coming into the marketplace. Starting first, probably about 4 or 5 years ago, was in the payment space. Today, now, you're seeing that broaden out to wealth, investment, lending, a variety of other fintech areas. In fact, one of the statistics I find very interesting is that there's more fintech employees in London than there is in Silicon Valley. So you can really see this has been a growth that has just come into place in the last 2 to 3 years. What does that mean? That means you're going to see commensurate growth in a number of different fronts, but you might not see a big lemmings going to the sea breakthrough in the industry. The challenge with it is that if you are not considering how does this fit into your competitive advantage, how does this fit into your business model, you're really losing a bet. Because it's not only that you won't be there to advance it, but I guarantee you there are many, many, many of these disruptors that are looking at how do I shave off little bits of the existing business that's there.
I think it's interesting we use the word digital and cyber. What we're talking about is the onset of technology, some web technology. Cyber's the bad, digital's the good, right? And a couple of weeks ago, Lord Turner was talking about, so the former chairman of the FSA was saying, actually, I'm really worried about peer-to-peer, and will this all unravel one day, and will this generate a financial crisis? Has enough thinking been done about it? And I think there are clear risks associated with that digital innovation, as much as there are clear risks associated with those individuals who are trying to take advantage of security through fraud and so on in the system through cybercrime.
So, as you say, some of the companies that you're sitting on are doing quite a bit around it. You're seeing good work, but what should boards be doing? What should NEDs be doing in particular? Because I guess it's quite a challenge to really be as au fait as you need to with digital, with the constant change. So is it something that NEDs can contribute to?
Well, absolutely. I think for the first thing is that you want to have access at the boardroom to digital expertise. Now, in some instances, that might be a NED that has that experience. Someone that might have come out of an industry where they've already digitized, out of technology, for example, and would be a NED sitting around the table. If that is not available, other areas are you can have special advisors that the NED can call in to come in and to be advising them, and that could be one or more advisors. The third thing is a number of the consultancies are putting together opportunities for basically expertise that comes in. Huntswood, for example, looks at it from a governance standpoint, others from a technology standpoint, a variety of different risk fronts. So somehow getting briefed at the board level on exactly to the point that Stephen's making. Does this make sense for our business? If not, why not? What are the risks of this to our business? What do we need to be doing to mitigate those risks? So those types of questions that you can have seasoned answers to are what should be happening at the boardroom level.
Is there a nervousness around cost? Because a point you made earlier, there's lots of legacy systems, particularly in financial services. They've absorbed different banks and therefore different systems, IT systems over the years. And organisations want to get a single customer view or understand how the customer communicates with the organisation. But to join up those legacy systems in the first place is very expensive. And you need to invest a lot of money and not necessarily see any return for that. All we're doing is getting the systems to talk to each other. Is there a nervousness or reluctance around organisations that they're going to make a big outlay for something which they're not going to see any immediate returns on?
Well, I have to say that, again, from the boardroom perspective, being able to keep all this current information is really impossible. So in your statistic, you used cloud. So before that would have really become viable for an organization, and that really is in about the last 2 to 3 years, you would have had to have had all systems talking to each other, all databases, everything happening in the physical space. What the cloud offers is a cost-effective way of getting those types of activities that you want accomplished up in a cloud for literally a much less cost. However, it brings with it risk as well. So it's this opportunity to understand what are the new technologies, what are you trying to do, really? And then what are the options available for you to do that? All that is much more complex than it was before, so you need that understanding, that dialogue to happening certainly at the executive level, and then bringing in for the strategic level at the board level.
But I think that threat versus opportunity question is really interesting as well. We've talked a lot about cost and talked about this is about preventing threats to your business. It's about ensuring you're future-proofed as an organisation. One of the things we're working a lot at Huntswood at the moment is advice, and what does advice look like in the future? You've got the government and FCA's financial advice market review due out in April. Pensions freedom is creating a great need for advice, but RDR has reduced access to it. But we've had Santander say recently we're going to look at mass market, mass affluent advice again short term, and then you've got everybody talking about robo-advice. Now, if robo-advice is a psychological profiling, you tick a few boxes, something going to pop out the other end, that to me sounds like a bit of a conduct risk kind of waiting to happen. But look at the size of the prize. You know, if you find a way at a cost-effective level to do advice for a mass market who has greater access to their pension, is that not something that you'd want to put an awful lot of investment in as an organisation? And it's open to everybody. You know, that all of the banks can play here, all of the pension funds can play here, the advice networks can play here, and there's going to be some really big winners. You know, there's going to be a real big upside there. And so some of the work we're doing with Surrey Business School is kind of part of looking at that and what might that 10-year strategy look like for kind of how you deliver advice to a mass affluent market. But I would really be challenging organisations to think, yeah, there are real risks to your business presented by digital that you need to think about investing in to overcome. But also, what are the big prizes you really want to go and grab?
So the key opportunity is to look at it this way. What are the things that we as an organization do really well? And then are there technologies, whether it's digital or other, that can actually help us do that better? And we have to rethink around that. So not even applying it in the same way. But your example earlier, we used to have to spend billions of customized pounds to, to hook up together all legacy systems. Well, maybe digital could help us do that a little smarter. Yeah. And maybe it means that we don't eliminate. We think we've got a great branch network and great people out there or really smart advisors. Great. Maybe it means that what we're doing is providing the support and mechanism to them that helps get rid of a lot of that manual, unsecure, and inconsistent process along the way. So there's a lot of different ways to look and define it, but it does mean you need to be actively engaged, analyzing it, understanding what it means to you, taking advice and counsel on it, and being able to then create a strategy that works for your particular institution.